and welcome to the 2-Minute Warning Global series, where we ask what's next and what should be next in the global energy transition. Today, we're going to zoom in on the digital delivery of sustainable solutions and what new energy options we should be watching out for. I'm very glad to have Matthew Harwood with me. He is the Senior Vice President, Strategy, Risk and Sustainability for McDermott. Thank you for joining us, Matthew.
Pleasure to be here.
Thank you. So should we start with some broad strokes in this chat? Let's go with the pandemic and the urgency for a green recovery. Build it back better, build it back greener. It's prompted many energy majors to significantly diverge their strategies. To be fair, we were beginning to see big signs of it before COVID, but COVID has accelerated it beyond what many even anticipated. And with net zero pledges by 2050 by governments and companies ramping up fast. And this, of course, builds on previous commitments that I just mentioned in renewables, especially with wind, solar, biofuels, and so on. Following the last year, how confident are you that all those promises will deliver real change? What are you hoping to see on the ground for the rest of this year?
Well, you're right. I think we have seen, might say surprisingly, a recommitment and even an acceleration of our ambitions globally to deliver a more sustainable energy ecosystem, and it's quite encouraging. And maybe it's because that we've recognized the fragility of our situation on the planet, and the COVID pandemic has really caused us to think more deeply about the way that we're living globally.
The rug has truly been pulled out, hasn't it?
I think, yeah, exactly. And so you have seen, as you've said, you've seen recommitments by companies, by countries. I mean, notably China and the US moving forward with strong commitments. But, across the energy landscape, people increasing their aspirations towards net zero and allocating, even in tough times in the energy industry, allocating more capital to low carbon or energy transition technologies in the context of depressed capital budgets. So very much energy transition and sustainability initiatives have protected their share in a depressed investment environment.
Which we didn't see with the last global crisis of 2008, 2007, 2010. We didn't see that, did we? We definitely saw a retrenchment in the climate policy and the climate agenda when that financial pressure was on, and this time we've seen the complete opposite.
Yeah, you're absolutely right. The sort of false dawn of 2007, 2008, after the financial crisis, you saw the investment across the board dropping, and the kind of the sustainable green revolution going backwards. But it seems to have accelerated over the last 12, 18 months. And we see that very much with our clients. And as you know, we work with global IOCs like Shell and BP. We work with a lot of national oil companies like Aramco and ADNOC. And we do see, real acceleration of the commitments towards the energy transition, supported, as you mentioned at the beginning, by digital as well, and that's the two themes really strongly come together in this net zero trajectory. But it has been encouraging and exciting to see that commitment and that acceleration that you mentioned.
It sounds like you are confident that those promises made will start to be rolled out later this year. I mean, of course, those promises are multi-decade promises. We're not going to see things change overnight. But do you sound confident that we'll certainly start seeing the right steps in place as the year rolls on to make those realities, such as firm roadmaps for new energy markets and things like that? Is that fair to say?
I think it is fair to say, and I think now the expectation has been very clearly set by a number of different stakeholder groups. So these companies operating in these ecosystems, that the expectations have been set by governments through signing up to the Paris commitments, by shareholders, and you can see what's happening in the sort of the capital markets where low carbon is at a premium, and shareholders want exposure to clean growth. And lastly, and I would argue most importantly, which is with employees, increasingly employees are coming to companies, investing their careers in companies, particularly the young generation, and are being attracted by these promises and these commitments. And I think companies do a U-turn or backtrack, they'll have a problem with all three of those stakeholder groups. So I feel that these changes will stick. Obviously, always subject to financeability. I mean, that's always the bottom line. We have to be able to.
It's safe to always put a disclaimer in.
Yeah, so we have to. Companies do need to be able to access the right pools of capital to make the investments that are needed, and the sums are very, very large. I mean, just yesterday the IEA came out with a new more than 100 trillion required to deliver the energy transition by 2050. That's an enormous amount. That's investing at probably something like 8 times the rate that the oil industry invests capital at. So
which itself has had reduced investment over recent years, and energy efficiency, for example, has been on a downward trajectory in the investment that it needs according to the IEA as well. So it's not even just doing that leap, is it? It's doing a flip and then a leap in order to catch up.
But I think the good news, and where we come in, and I'm obviously representing McDermott, a part of the supply chain and energy and EPC contractor, we have capabilities and capacity to support on the delivery, and we and many of our competitors feel that we have a very strong role to play in delivering the new energy infrastructure, just as we delivered the old.
Well, that leads me on to legacy infrastructure, because the Financial Times has said there's up to $900 billion risk of stranded assets under the current climate targets as it stands. And obviously this rate of change has been faster than many have anticipated, and it does take time to upgrade infrastructure. There are obviously some lower hanging fruits for some digital routes, but generally it does take time. It takes a bit of money. It takes a cultural change, a mindset change as well. How much of a risk do you think there is to legacy infrastructure? Do you think a figure like that $900 billion, do you think that that's the worst of the worst, or do you think that there is real reason to be concerned?
Well, I'm quite a pragmatist when it comes to legacy infrastructure. I think if something has been built and is there, I think that we should seek ways to use it as sustainably as we can do until the end of its natural life. I think there is a lot that we can do with legacy infrastructure to improve its sustainability. And you talked about energy efficiency and energy management earlier, and digital has a strong role to play there. Just running the assets that we have in the most efficient way possible. I mean, there's a lot of low-hanging fruit there. Then there's a lot you can do with retrofit. I mean, we're looking with our clients at how do you electrify facilities to reduce carbon emissions. How do you deploy carbon capture in certain applications in order to capture CO2 emissions? So I would say, I guess I'm not too much of I'm more on the evolution side rather than the revolution. I think we should do the best that we can and utilize until the natural end of their lives our existing assets.
Because a huge amount has been invested in them already, and also there's that risk of demonizing legacy infrastructure, to use a strong word, but diluting its relevance. It doesn't say a lot to investors who are part of the pool who've been investing in this sort of infrastructure. It doesn't give them a lot of confidence about future energy. It creates a bit of a wobbly foundation, really.
Yeah, I agree, and so I wouldn't go there. And actually, in fact, I was looking at some data yesterday around the US. Already, naturally, there will be a decline of the legacy assets. Just with this, a lot of them were built many years ago. And so, if you look at US power generation, for example, the problem isn't actually as bad as you think to get to a net zero by 2050, because the natural end of life of many of the coal plants and the gas plants would have happened anyway in the course of the next 2 decades. And so, you really, when you rebuild, you said build back better at the beginning. You can build back more sustainably when these assets come to the end of their natural lives. But I wouldn't do a massive U-turn. I'd allow them to fulfill as efficiently as possible their original intention, and then replace them with something cleaner and greener and more efficient.
Because there are still checks being signed for major projects, and there was one recently by a Chinese company, coincidentally on the same day that Beijing announced a short-term plan for China's roadmap to 2060, net zero by 2060, and that was a $10 billion coal project that is to be built. So I think there will inevitably be stragglers past that limit, past that 2050 there'll need to be infrastructure factored in. But as you say, it's about remembering that we still have a length of time to get, and for these plants and other infrastructure to have their natural journey as well, and it will all tie in. When it comes to digitalization, you just touched then on retrofits, and they can be relatively fast. Can you just give us an idea by what you mean by that? I know every plant's different, every project's different, so very much taking it with a pinch of salt, the time frame, but an idea of how long it would take to retrofit a medium-sized plant with, you know, affordable and easy to use digital tools.
Well, it's very difficult to come up with a one size fits all. Are
we talking a year to 3? Are we talking 5 years? Are we talking 6 months?
You know, I think to put in some of the data collection and data analytics. You know, it's advanced analytics. I mean, people use the expression machine learning, but I prefer advanced analytics around a current plant. Is actually it's speeding up. It's getting faster and faster as people use different tools to capture data from a variety of different old legacy data systems across a facility, and created essentially a data lake and actually start to analyze that data and look for correlations, look for opportunities to run the plant more efficiently. That can be really, you know, that kind of a project can be really quite quick, and the benefits.
What, 3 to 6 months? That's
that sort of a time frame, and the benefits
that's fast,
can be,
considering the value that you can get from that.
Yeah, I mean those projects can be really fast, and the people that deploy those processes, of course, know the sorts of things to look for, and can get you to some quick wins really, really quickly. Like things like, for example, in a facility when you find that heating systems are actually fighting with cooling systems, and so you've got just simple control issues where you can optimize how the plant is working. I think increasingly we as McDermott are looking to build digital into the entire project from the beginning. So when you're talking about a greenfield plant, our approach is we deliver the plant, the physical plant, but we deliver a digital twin as well, which is so you can do all of your experiments on the digital twin that you want.
It's always surprised me that those aren't rolled out more widely. Are they extremely expensive? Do people not feel comfortable with the technology yet? Is it a very niche expertise? To me, digital twins can solve so many problems that we discuss regularly.
I think I would say the technology is there. Really, it's more about change management. It's about how do you bring the whole ecosystem delivering a project along with you to work in a new way, because you have a variety of different parties. You have a contractor, there may be a consortia of contractors, subcontractors, client. The client might be in a JV, and so you have to bring a wide group of people along and to work in a new way. Yeah, so it's actually, for me, it's actually as much about change management as it is about technology. And indeed our digital team have dedicated change managers, non-technical people to address that issue of how do you bring the entire ecosystem along in the need to do everything digitally and leave a sort of a digital legacy.
Well, every industry is a people industry, isn't it? Everyone it's based around us and how we operate, really.
Yeah, ultimately we're all people with our own quirks, and but no, there's the digital unlocking energy efficiency is the first place that we should start on the sustainability journey, because there's just a huge amount of inefficiency in what we do. So
if you had to pinpoint one area within that picture of energy efficiency that and digital tools being used to unlock energy efficiency, and there are projects that are making progress. If you had to give an example of an area, a country, or a type of company, perhaps you don't want to name companies specifically, what stands out to you? If we can narrow down progress on energy efficiency and digitalization, what would you want to highlight? Well,
listen, I'm not going to do what I want to do is say something that's relevant for our business, because I think we can be more credible if we talk about what we do. But just to give you one example.
A taster is great.
A taster. We do a lot of work in the offshore in McDermott. We build fixed offshore structures, and we do a lot of subsea work as well. And when we look at our own carbon emissions as a business, a lot of our emissions come from our marine installation vessels, which obviously burn marine diesel at the moment. Now, one very nice example of how we can be more efficient in a project is by using our digital twin of the subsea system of the oil or gas development that we're actually installing, alongside information from our client and from the vendors of the key pieces of equipment. And we can digitally run scenarios of different designs and different installation sequences in order to minimize the amount of time and the amount of hours of obviously burning fuels in the field to actually install the project. So you can essentially run different scenarios and say, well, if we designed it this way with this piece of equipment and installed it in this order, we could save 30% from the schedule and 30% from the carbon emissions. And
safety as well. The divers don't have to be down so long. Perhaps they don't need to go, with the subsea ones, for example, and just general safety elements as well, I imagine, factor in.
Yeah. I think that's another. I mean, the less time you're working, the less exposure you have, and so the power of the digital tools allows you to do these sort of what if type of scenarios, and to find the optimum and almost rehearse the job before you actually do the job to find the optimal way through it. So that's just as just one example in the field when we're actually constructing a project of how sustainability can be supported by digital.
And energy efficiency, and within that sustainability umbrella as well, of course, and how it all feeds in. Do you see the demand for digital twins increasing quite a bit in coming years with this revitalized climate agenda? And of course, we've got the revitalized climate agenda on one side, we've got talk of peak oil as soon as 5-6 years away on the other side. Energy companies, wherever you are, they're under a lot of pressure to either move fast or move creatively and innovatively. Do you see digital twins playing a huge role in that?
I think for me, digital has become almost, it's become a standard way that you need to deliver your projects. It's becoming more and more expected, and it should be expected in legacy projects, but also in new technologies.
But how about digital twins? Do you expect digital twins specifically to increase quite a bit in the coming years?
I think as I say, I think they will become ubiquitous, and to the extent that investment increases, there will be increased demand for the digital services around the things that we build. Actually, in some of the industries which are growing, let's take wind for example, use of digital is already quite prevalent. I mean, for example, remote control centers where you might be controlling 50 different wind farms from a single location, where you're leveraging the economies of scale across 1,000 wind turbines. There's no need to have 50 different offices. You can have one data center, one control center, where all of the information is coming into a single point. And actually, I think some of the low carbon and energy transition industries arguably a little bit ahead of oil and gas in terms of the deployment of digital technology. So look, it's digital and digital twin and advanced analytics and all of these things I think are here to stay in the built environment, whether it's renewable or oil and gas.
But it's advanced for the coming year. If we were to zoom in on an area, of course, all these predictive analytics, artificial intelligence. You've touched on IoT, big data, and there are many in that bigger digitized and digitalization picture under the fourth industrial revolution umbrella. For the coming year, what would you say we should keep an eye on when it comes to low carbon growth and the energy transition to a greener future? What are the top 3 technologies that you think we're going to see a lot of progress on? You've mentioned analytics already, advanced analytics being a big one. So there's only two left.
There are only two. I only get to two. Can I choose non-digital technologies, or do I have to stay in the digital?
Yes, no,
okay,
non-digital's fine.
So I think, I think digital, I'll reiterate number one, digital technology supporting energy efficiency. That's the obvious place to start to start utilizing our energy more efficiently.
With advanced analytics being a good low-hanging fruit to get.
Yeah, absolutely. Energy systems are complex. If you can use the sort of analytics that are available, the data analysis is available, you can actually find opportunities to improve, which you cannot just see yourself, but you can get them out of the data. Two other technologies which we're working on that I think are coming and growing very rapidly, and carbon capture is one of them, because we again have to start with the assets we have, and there's a huge opportunity to deploy carbon capture at scale across a wide variety of different industries, and we're working with clients to say what technology is the right technology for your situation. And as the value of carbon increases, the economic incentives are climbing for clients to look at these projects. So that's number two, carbon capture. And then might be a bit buzzwordy, but hydrogen. I mean, the increase in the interest in hydrogen is colossal. It's off the charts at the moment, and as a company that's had a long history with hydrogen, with over 200 projects that we've done in hydrogen, we're looking at it very seriously, and again looking at what are the right technologies for the specific application, and how do you scale them up and get the cost down. Those are my top three.
Top three. And on the hydrogen front as well, when it comes to, you already mentioned the price point, the economies of scale, the transport side, but it's the world's new oil, it's being called, the most abundant natural element ever. And of course, it's already been in our industries for years, decades, but it's got to completely, and this does not feel like a false dawn for hydrogen, because there have been a few. In terms of the broader market and broader understanding, this does feel like a true dawn, and I'm sure you agree from what you just mentioned. Thank you, Matthew, so much for joining us. There is certainly a lot to chew on there. Thank you.
My pleasure. Nice to speak to you.
You too.